guys, and welcome back. I wanted to speak to you about imbalances in the market, why they exist, what they mean, and how you can actually use them in your strategy, understand the momentum, and to take advantage. In all markets, there must be something called an equilibrium. This is where institutions have to keep price within a certain large-scale range. You will notice if there is turmoil in the markets and price drops dramatically. Usually, the central banks will intervene by either purchasing currency or purchasing bonds. This is simply to restabilize the price. If we didn't have this, price would literally just fall to the ground and the economy would crash. So institutions are required by the government to fulfill these imbalances. For example, late last year in September, the Bank of Japan came out and stated that they would protect the yen from the dollar rally that was happening at that time. Now, this all came about from the aggressive monetary policy, hiking their interest rates at such a speed. Then in late October, the Bank of Japan intervened again, and that was by purchasing more yen. So what you saw was a huge sell-off within 4 hours. The yen actually rallied almost 5,000 pips. This kind of move can only be done by a central bank. Like I said, these things have to happen to keep a currency stable. So here, let me show you an example. As you can see, the dollar was rampant over the course of 6 months. It had constant imbalances, and once price reached the 144 level, the Bank of Japan decided to step in, and that was to purchase the yen. And as you can see by this absolutely huge sell-off, then a month later, we had a second intervention from the Bank of Japan, which they did preempt ahead of time. That's here, just touching the 152 level. The bank stepped in again to protect the yen, so watch what happens to the price now. Institutions liquidate positions and the price changes direction completely. It fulfills most of the untouched orders and comes back to the equilibrium. Now, interventions from the central bank aren't the most common, but in extreme conditions, this is a central bank's mandate. It is to protect their currency. So guys, the same applies on a smaller scale with institutions. Once a big move happens, you'll normally see a retracement within a few days after, so that all those untouched orders can be fulfilled. So guys, if you found this useful, drop us a like, drop us a follow, check out our Instagram page for more exo funding.